You know, 100 days ago, May 20th exactly, is when Scott Kirby took over at United. And a lot of people have said, well, look, when you look at a CEO, measure those first 100 days. What kind of a footprint do they put on the business, either in terms of keeping it going, improving the situation? Remember, back on May 20th, I mean, these stocks, all of the airlines, they were close to the lows of how far they fell off because of COVID-19. Since then, United shares up 48%. So what kind of a stamp has Scott Kirby put on United? Well, look, the entire industry has been struggling, but a couple of things stand out. First of all, he's been very aggressive and very decisive about aggressively making moves, cutting costs, adjusting the schedule, adjusting the fleet, which is what United needs. And that's what all the airlines need. So he gets kudos from most people in the industry with the decisive action that he's taken. United's capacity right now down 68% versus last year. But if there is one signature move, and it's hard to say there's any signature move because there's been a number of them for United and other airlines during this crisis, it's the fact that the liquidity push was centered around leveraging the Mileage Plus Frequent Flyer program. When they did that, a lot of people said, wow, this is a smart move. They borrowed about $5 billion. Their Q3 cash estimate, it's going to be about $17 billion. That's the expectation. They're still burning about $40 million a day, but that's down substantially compared to where they were back in late March, early April, when they were burning about $100 million a day. Let's shift gears a little bit and look at all of the airline stocks and focus on the question of, is there the possibility of another payroll aid package coming this time from the White House? Yesterday, the Chief of Staff, Mark Meadows, said that it's possible through an executive order that the president could say, look, let's do something so that these employees are not fired or let go, I should say, on October 1st. The flight attendants union is not crazy about that idea. Why? Because most likely it would involve telling the Treasury Department, the president telling the Treasury Department, look, make several billion dollars available for the airlines to borrow so that they can pay these employees. Well, the airlines have already leveraged substantially. They do not want to borrow any more money. They'll take a grant from Congress, which is what they're hoping for with the CARES Act. And ultimately, Joe, this comes down to how many people are flying, and we're still not seeing the rebound in traffic that this industry needs and this industry was hoping for this summer. Right now, the traffic levels are down anywhere between 67 and 74%, depending on the day. They're not down maybe 40% or 50%, which is what people were hoping for. No, they're still down 67 to 74. And remember, September and October tend to be slower, obviously much slower than what you get in July and August. We're going into that slow period. And then the first quarter, that is the slowest time of the year for the airlines. So this is a tough stretch here for the airlines coming up.